Hi, this is Zach here with the US Chartbreakers for Friday the 24th of March here at Zach's Traders Cafe. Starting off with the S&P, where it looks as though suspicions that we've got a 50-day failure which will lead back to a test of support down there towards 3808. That seems to be on the cards. We've got a falling 200-day line as well, which doesn't help matters either, and we failed the RSI 50 during the week. So the combination of the 50-day moving average failure and RSI 50 failure suggests a move towards 3800, maybe even down towards the December support area, which was as low as 3764. Moving along to the stocks, and a stock which is looking rather perky at the moment and almost exciting is C3. Here you can see that we've had a decent week bouncing above the rising 50-day moving average. In fact, the 50 and 200-day lines both rising. We had a golden cross buy signal back in February. That suggests that there should be further progress here while we're above $21 in the 50-day line, looking for the top of that rising trend channel from September as high as $36, maybe as soon as the end of next month. So looking pretty well set there at C3AI. Another stock which is on the front foot in a rather depressed market, let's say, is Cemtrex. Here we've had a beautiful breakthrough the 200-day moving average, second time lucky over the course of March, and hopefully we won't need any more tests of support towards the 200-day line. In fact, the 50 and 200-day lines there very close to each other around the $8.40 area. Above that, we're looking for the top of that rising trend channel from back in October, as high as $16 as a target, maybe as soon as the end of next month, and at least while we're above the $8 zone, looking quite healthy on Cemtrex. Next situation is also bullish, Electrocore. Here we've got a chart with a bear trap rebound, so bear trapping from below the old support there around $3.10 earlier in the month, and an end of day close above neckline resistance there at the $4 area should be enough to get the shares up towards the top of that broadening triangle from back in October. As high as $7, maybe over the next 4 to 6 weeks. But the key here is staying above that $4.09 peak that we had earlier this month. Above that, looking quite strong. If you are cautious, I suppose you could wait for an end of day close through the 50-day moving average. But the bear trap and the break of neckline resistance should be enough to seal the deal, especially as with that lower low that we had earlier in the week, we actually had a higher RSI trace. That bullish divergence is a momentum trigger. Moving on to a more famous company, Intel, and here, again, surprising given the sentiment towards anything tech. It's actually looking reasonably strong, solid since October. We had a final bear trap dip below the December support there around $25.60. Above the 50-day moving average at $28, looking for the top of that broadening triangle from September, as high as $34 by the end of next month. So quite a reasonable risk-reward prospect there. Moving along to a stock which gets quite a few mentions here, periodically at least. We've got Marathon Digital, and here nicely snuggled there between the 50 and 200-day moving averages. We've got the RSI well above 50, so looking for an end-of-day close through $9 to give us a target up to $12 by the end of next month. The 50-day line at $7.20, the stop loss on a potential move to the upside and a break of that 200-day line. We haven't been above the 200-day line here for a long time, in fact, since the end of 2021. So that would be a decent trend change if we can clear the $9 area on Marathon. Stock coming up next, also in the techie area, Micron Technology. And here we've broken above the 50 and 200-day lines, the 50-day line there around $59 above that. Looking for the top of that rising trend channel from back in August as high as $71 over the next 1 to 2 months. So maybe going into May, early May for that target if we proceed decently. Only back below the 200-day average at 57, really delaying the idea of a push to the upside. Another nice chart-breaking situation is Riot Platforms, and here you can see this bull flag breakout that we've had. We've already covered the stock at the end of the year, and so there was that triangle breakout. Current situation is that we're looking for a move towards the resistance line there from back in May last year. That's heading for $13, and that target's certainly valid while we hold above the $8 area, which was the initial 2023 resistance zone. Maybe you could have that down to $7.50 as a stop loss, but at the moment looking like $13 should be on the way while we're above the $7.50 to $8 area. The other point to note is the way that we've had unfilled gap to the upside there earlier in the month, and the shares making good on that particular continuation signal. Just a couple of stocks to go now. First is one which is decent riser at the moment, Sofi or Sofi Technologies. Looking for an end of day close through $5.80. If we can get that, then we could be back up towards the retesting February resistance. It's $8 after the decent testing of support towards $5 that we've had over the course of March. Nice bounce for the RSI off the oversold 30 level as well, but the key here really breaking that 200-day line and then pushing forward above that gap and now onto $7 and $8. The next stock is the last stock, and it comes in the form of Worthington Industries. Here we're looking at unfilled gap to the upside yesterday, rising 50 and 200-day moving averages. So that gives us decent confidence that we're in a rising trend channel from back in September. Top of the channel, heading for, if I can draw it correctly, heading for the $70 plus area, coming through in that way, and we could see that hopefully by the end of next month. Ideally, there's no break back below the floor of the gap there at $55. Above 55, looking for 70 on Worthington. That's it for me today. More updates over the next week.